We're analyzing Southern Copper, stock ticker SCCO, to see if its market price is a fair value. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for Southern Copper. Then we're giving a final rating to the business. There will be a key bonus metric along the way that just might be the tipping point when analyzing Southern Copper for your portfolio. Before we get into these valuable metrics, let's understand Southern Copper's stock performance. Right now, Southern Copper trades for $76.83 per share. In the last year, they're crushing the S&P 500. Their stock price is up 22%, while the index is down. In the last 5 years, Southern Copper is compounding at 8% annually. In the last 10 years, they're compounding at 9% annually. Going back prior to the global financial crisis, in the last 18 years, Southern Copper is compounding its stock price at 13% annually. The company also pays out dividends. Right now, Southern Copper pays a big 4.64% dividend yield. Their average dividend yield throughout this time is in addition to these compounded annual returns. Southern Copper trades just $6 below their 52-week high. The company is up $30 from their 52-week low. Southern Copper is a large business. They have a $58 billion market cap. But why should we be paying close attention to Southern Copper? Southern Copper Corp is an integrated producer of copper and other minerals, operating mining, smelting, and refining facilities in Peru and Mexico. Its production includes copper, molybdenum, zinc, and silver. The company operates through the following segments: Peruvian operations, Mexican open pit operations, and Mexican underground mining operations. Southern Copper generates the majority of its revenue from the sale of copper and the rest from non-copper products. Metric number 1, we want their average return on capital in the last 5 years to be above 14%. Over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns. These business returns will be captured here by return on capital. The average publicly listed business earns about a 7% return on capital in a given year. Looking for a benchmark that's double this allows us to build in some margin of safety based off the quality of the business. Southern Copper has increased their returns on capital throughout this time. They've earned above average returns on capital in all 5 years. Averaged out, Southern Copper earns just under 22% returns in a given year. This is more than 3 times better than a typical business. This is a strong check to start things off for Southern Copper. Metric number 2, we're looking at the company's growth. We're looking for revenue, net income, and free cash flow growth in the last 5 years. This metric is all or nothing. All 3 of these have to be up for this to be a check. During this time, Southern Copper has grown their revenues by 52%, their earnings have grown by 73%, and their free cash flows have nearly doubled. They're up by 96%. It's great to see such strong free cash flow growth leading the charge for the business. Free cash flow is the lifeblood of any business. Ultimately, a business's abilities to produce free cash flows now and until Judgment Day, discounted back by some reasonable interest rate, is what that business will be worth. We'll be using that exact method later on to come to an estimate of Southern Copper's fair intrinsic value. With all of these up, this is a strong check on metric number 2. Metric number 3, we're taking the perspective of an individual shareholder by looking for earnings per share growth in the last 5 years. As we learned, Southern Copper has grown their earnings by 73% in this time. The company has just a tiny amount of shareholder dilution, issuing less than 0.5% of additional new shares throughout this time. So their earnings growth leads the charge and it far outpaces this dilution. This is another check on metric number 3. Metric number 4, we're looking for free cash flow per share growth in the last 5 years for Southern Copper. This is a similar situation to their earnings per share, with their free cash flows nearly doubling and with just tiny shareholder dilution. This is a strong check on metric number 4. Perfect through its first 4 metrics, Southern Copper has 4 checks. But there's still one vital piece missing. You might think nailing high returns on capital and having strong growth is the key, but we haven't touched on the one thing that I believe sets truly wonderful businesses apart, which is having these characteristics without using a lot of debt. In metric number 5, we want Southern Copper's net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow the business has produced in their last 5 years. Southern Copper has reduced their debt in this time. They ended their most recent fiscal year with $4.8 billion in net debt. Currently, they have $4.6 billion of net debt. And in the last 5 years, Southern Copper has produced $9.76 billion worth of free cash flow. They're able to comfortably support their debt loads on a historical basis, and they'd be able to pay off their current net debts with just over 2 years worth of their free cash flows. This is a check on metric number 5. Southern Copper looks like it's cash flow generative relative to their net debt and that they're able to support this debt position. Before we get to our 6th metric, let's not forget about our bonus. As our bonus, we're looking at Southern Copper's dividend profile. Right now, Southern Copper pays a big 4.64% dividend yield. We're looking to see if their dividends supported by their free cash flows or not. Southern Copper has grown their dividend payouts in all 5 of these years. They've had normal dividends, and they also issued a special dividend in 2019. Southern Copper has also grown their cash flows at the same time, but the business was able to support their dividends in just 3 of these 5 years, and it doesn't look like they're supporting their dividends currently. This is because the company has grown their dividend payouts faster than they've grown their cash flows. While it's a snapshot of their last 5 years of performance and no guarantee for the future, it doesn't look like Southern Copper is able to support their dividends with their cash flows currently. Metric number 6, the big metric of them all, we want to see if Southern Copper has what it takes to go a perfect 6 for 6 and be a select 6 stock. We want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will give a slight risk premium to the yield of the 10-year treasury, and it may offer a reasonable starting point for a fair value of Southern Copper. Southern Copper currently has a $63 billion total enterprise value. This takes into account both their market cap and their net debt position. It gives a perspective of Southern Copper that's more similar to as if it were a private business. We learned in the last 5 years, Southern Copper produces $9.76 billion worth of free cash flow, meaning in an average year, the company produces just under $2 billion of free cash flow. When we divide that by their $63 billion total enterprise value, that gives us a 3.1% average free cash flow to enterprise value yield. On a current basis, Southern Copper has produced $2.2 billion worth of free cash flow in their last 12 months. When we divide that by their enterprise value, that gives us a 3.5% current free cash flow to enterprise value yield. Both of these are coming in below that risk premium and below the yield of the 10-year treasury. This is our first and only X of the day on metric number 6 for Southern Copper. Just because this is the case doesn't mean you're going to toss this business out. This is not a buy or sell recommendation of any security. It's not financial advice. Stick around as we come to a more concrete estimate of Southern Copper's fair intrinsic value before we give our rating to the business. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze Southern Copper, which takes us on to using a discounted cash flow model to come to an estimate of their fair intrinsic value. A DCF model is based off the predictability of a company's free cash flows. It's like any model in any discipline, its outputs are sensitive to its inputs. We're starting with an average of Southern Copper's free cash flows in their last 3 years, then using historical growth assumptions to project these into the future. It's up to you to do your own homework. Assuming the company grows their average free cash flows at just over 6% annually for the next 10 years, then assuming this growth rate is cut in half for the 10 years out from there, if we add in the company's tangible book value, which gives us an estimate of their net worth, if we were seeking a 15% rate of return, which is the rate of return Warren Buffett is looking for in addition to his margin of safety requirements, at today's valuations, an estimate of Southern Copper's fair intrinsic value is around $40 per share. That's down significantly from their current stock price. Their current stock price would have to be nearly cut in half. There are several key factors to be mindful of. Southern Copper has had a low degree of business predictability in its past. This affects our assumptions. Southern Copper's 4.6% dividend yield would be included in this 15% discount rate. We would not be doubly counting their dividends. As a commodity miner, Southern Copper operates in a cyclical industry. You'd want to have a sense of where the business is at in their commodity cycle and what are the major trends for supply and demand growth. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Before considering any potential investment decision, please consult with your financial advisor. Now it's time to give our rating. In analyzing Southern Copper, stock ticker SCCO, we learned the business earns returns that are 3 times better than a typical business. They've strongly grown their revenues, earnings, and free cash flows in the last 5 years and kept their shares outstanding pretty much flat. The company supports their debt loads with their free cash flows on both an average and a current basis. Their free cash flow yields on both an average and a current basis were coming in below the yields of the 10-year treasury. It looks like even though Southern Copper has a big dividend yield, that their dividend growth has outpaced their free cash flow growth. This may not be sustainable for the business. They've only supported their dividends in 3 of the last 5 years with their free cash flows. Putting together the factors of our analysis, Southern Copper looks like a strong candidate for further research. Performing our discounted cash flow analysis, if you've done the work and you believe those historical growth assumptions, from today's valuations, an estimate of Southern Copper's fair intrinsic value is just around $40 per share. The company was last at those levels in July of 2020. You'd want to be patient as you dig in and research the business. It's worth reiterating this analysis is not financial advice. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to take a look at next time. Thanks for learning about Southern Copper with me, and have a great day.